stage John Kadunas, Chief Executive Officer of Calamos Investments and member of the Concordia Leadership Council, and Mark Lazary, Chairman, CEO, and co-founder of Avenue Capital.
Well, Mark, thank you very much for coming to this. As part of the Leadership Council, we welcome you here. And I think there's been a lot of questions about investments in general in terms of this political turmoil that we find ourselves in, and how do we navigate through these choppy waters, as they say. So what I thought might be good is for us to just kind of discuss what our companies do and how they answer some of these questions. Why don't you start off by telling us a little about Avenues and when you started it and everything?
Sure. One, thank you. Thank you, everybody, for being here. We started Avenue in '95. I had run money for the Bass family. But really all we do is we invest in special situations, anything that's distressed. We've ended up doing that for quite some time. About 6 years ago, we gave back about half the capital. We manage about $10 billion today. Gave back about $10, $12 billion because we were seeing less to do in markets, and it's actually now that we're starting to see some more. You've got huge opportunities, obviously, in Europe because of Brexit. People really, the more uncertainty you have in markets, the better it is for people like me. So you've got a lot of issues right now. I would say in Europe. In Asia, you've got a number of issues, mainly because of China and the slowdown of what's been happening. And then the US, we have our own issues. And so those issues, mainly our economy is slowing down. This whole trade war with China is having a real impact. Whether or not even President Trump is able to cut a deal, you've had a number of companies that have started shifting their manufacturing. So I think you are going to see a slowdown. For those of you, if it's 2% last year, it might be 1% this year. I don't think you get a recession, but if you'd like to take advantage of a lot of noise, it's great for us here, and that's what there really is, right? And I think we are able to do that in sort of all the different regions we invest in.
Okay. So to give you a little bit about our background, Calamos Investments was founded by John Calamos approximately 42 years ago. We're primarily a mutual fund company, closed-end funds, open-end funds, and some SMAs, separately managed accounts. And John and the investment team has for years been pioneers in what they called alternatives, convertibles more specifically, and some other products that we do now over the years. So a lot of the mutual funds that we have are actually working really well for our predominant retail investors in these volatile times. And some of the questions that we get asked is we look at the world and the landscape. We looked at recent activities of the Fed. We look at how in Japan negative rates has affected them and deflation. Europe is falling into that category, and there's definitely a slower economy in there. How do we take advantage of that opportunity, and can we continue to make money if the United States goes into that pattern? And do you think that will happen?
Look, I don't think we go in a recession. Recession is 2 negative quarters, so it's kind of hard to do that. I think what you will see is a big slowdown. And that slowdown means if you're growing at 2%, you go to 1%, that's a 50% hit. So maybe we grow at 50 bips, but it's hard. I mean, here's a simple way to look at this. So 10 years ago, the risk-free rate was 4%. So if you just left the money in the bank, in 2008, at the beginning of the crisis, you were making 4%. Today, if you're in Europe, you're making negative. So that means if you put your money in, you're paying the bank 1 basis point, 5 basis points, whatever it is, to just keep your money there. And most people are trying to make 8 to 10%. So think of what that's done to markets and, sort of your company where you're trying to generate for people 8 to 10%. The ability to do that today, if you can do that, is just huge just because of where rates are.
You see that in terms of a lot of the insurance companies that are trying to match their liabilities, and they have to continue to lower their goals because it's so much harder to make that money. And we like to be in products. We have a product called Market Neutral, where it doesn't really matter. It's a fixed income alternative. Where rates are going, you make consistent money, although not as big of a percentage, but more like a LIBOR plus 300. And we've had this fund for 29 years, and it's been pretty consistent throughout. And that's something that we've seen has been somewhat successful. Now, let's talk about event risk. And when we have the current president tweeting all the time, and we have major themes such as the trade war, or I like to call it fair trade negotiations. We have Brexit. We have all these other world events. Where do you and your firm feel there's opportunity given those kind of event-driven risks?
I think the biggest opportunity is in Europe and Asia today, just because they have the most noise. So, and because of Brexit, you can end up, people want to sell, they want cash. If you're a provider of liquidity, we just invested in a company in Ireland. So think of this, the entity that owned it had to sell. And the reason they had to sell is they were making loans to small businesses, right, in Ireland. And they're making small loans to either businesses or individuals. And they had it in a mutual fund where it was a $15 billion mutual fund that went down to like $1 billion. But they had to give the liquidity to the investors, and we were able to come in and sort of get a great price for this asset. So if you've got capital today in Europe, in Asia, there's just less capital there because the banks aren't lending as much. So we have a huge opportunity to sort of make money in those jurisdictions today.
For us, we manage money in different international money as well. The predominant amount is domestic, but we do have emerging market funds. In a lot of ways that Calamos Investments mitigate some of that risk is using convertible bonds, which has been one of our fortes in strong risk management to try to limit some of the downside, maybe not capture all the upside. So there's a lot of, obviously, country-specific, sector-specific that our emerging market funds are looking at, even in China. But we also interlay some of the convertibles to try to mitigate that risk. Do you care to talk about the elections coming forward and what does that do for the markets, and how could somebody maybe navigate through that?
Sure. So I can't see everybody, but in this room, who's a Democrat? Raise your hand. Okay. Who's a Republican? Raise your hand. So it seems, that's going to be the issue, right? And it's just, you've got an election coming up, which I think it seems like things are pretty evenly split. Maybe you've got a little bit more on the Democratic side, but you've got to go out and vote. And if people want change, they'll bring about that change. If they don't, it'll be more the same. I think for us, if you're in I think you're sort of seeing with President Trump where it's going to be pro-business. And I think you're seeing it on the Democratic side where, the theme is more taxes and more regulation, right? And so the question is, what do people want? And if the economy is doing great or the economy is doing better, people may stay with President Trump. If it's not, maybe they'll give whoever the nominee is another chance. But I think for us, we just invest. I don't think it's going to have that big of an impact in what we do. But I guess for you guys, what do you think?
I think that, and we've been telling our clients this a lot, is number one, you have to be invested. You have to be in it to win it, as they say, right? So be in stuff that can handle this volatility, because between now and when the elections happens, anything could happen. It's hard to tell what might happen with China, how the world's going to react to Brexit, what might happen with unemployment. So be invested in securities that can take advantage of that. And one of the things that I wanted to talk to you as well about, last week we had a situation with the drones in Saudi Arabia and oil. And what was your take on how the markets reacted to that?
Well, it's fascinating. If you think about it, the market, the day of the attack, oil surges, I think it's like 15, 17%. And now it's back to where it was, maybe a couple of percent higher. Look, there's a lot of volatility in the region. And the more volatility, the more issues you're going to have. So I think on that front, do I think over the course of the next year you'll have more issues there? Yeah, it doesn't seem like that's something that's going to get resolved. So I think you'll see oil is leveled off and it'll keep going up, mainly because of all these issues that are in the region and the fact that you have actually a number of the powers there who just want to fight each other, whether it's Iran, Saudi Arabia, and the other countries.
I think what was very interesting was that the resiliency of the market.
Yeah,
how it came back pretty quickly. I have a feeling.
Yeah, in 3 days, you're right.
I don't know that would have been the same 5 years ago. I think us becoming less dependent of overseas oil and producing more of it here, along with the world changing, electric cars and what have you, creates a different dynamic that may have caused a much bigger disruption, I think maybe 5 years ago than it did, as early as 5 years ago as it did last week. Some of the topics that we've been asked, is your firm is an active manager. And then the last several years, there's been a big influx of money going to passive managers. Mm-hmm. But as we've seen this volatility increase, slowly we're starting to see more people, as I like to say, want more hand-holding. Can you speak to that? And I think we're speaking to our books because we are very active managers. But yeah. Where do you see the world going, and where do you see that question and that debate being?
I don't think it's that complicated. I think at the end of the day, if you were going to tell me 10 years ago the market was going to go straight up for 10 years, I would say to you, go into an index fund. It's not that hard. I mean, if it's going this way, what's your focus? How do I minimize fees? If it goes like this, then you want an active manager. So where do you think the next 10 years are? If you're of a belief that the markets are going up for the next, forget 10, 5. If you think it's going up, then go to an index fund. If you think it's going down, then you need an active manager. You need somebody who's going to be able to do things. And I think that's really what it is. So I think today you're going to see the rise back of active management because there's more volatility in the markets.
I agree, and I think that given the volatility, I don't think it's going away.
It's not.
And not in the near future. And so I think it does act for active management. It bodes very well. And I think for us, if our funds do what they say they're going to do, people are willing to pay for the active management. And
everybody should care about what your net return is. Yeah.
Exactly. All right, so what are the questions I might want to close up here, because I know that we're under some time constraint. There's different types of investments that we all make in the world, in the funds and whatnot. And as of recent one, you made a very, very interesting investment with the Milwaukee Bucks.
Yep.
Tell us a little bit about that, and are we going to see a championship ring on your finger next year when you're on stage here, hopefully?
Yeah, I'm going to get one of those big, gaudy diamond rings that they give you when you win a championship. it's funny, last time the Bucks won a championship was in '71, and it was literally a little small gold ring that they gave out, just says, world champions. So one of the first things we did when we bought the team was actually copy those rings, and so that we could have it. I'm not wearing it today, but that way people sort of stop you. They go, oh, wow, did you own the team back then? And you want to sort of say yes, but you didn't, but you've got sort of these rings that are great, and you give them out. I think, look, it's been a phenomenal investment. It's been great. It's, if you're a sports fan, the NBA hasn't been more popular, right? It's doing great. And Giannis Antetokounmpo, we got lucky when we bought the team, was one of our players, and he's become the most valuable player, symbol for Greece, for the NBA. So, look, if anybody here wants to go to a game, please let me know. We'll get you tickets. It's in Milwaukee. That's the only negative. But we'll definitely take care of you. But yeah, I hope we win a championship. I mean, that's the goal of all these things, is to try to win ultimately a world championship.
Well, good luck to you. Thank you very much, Mark. Appreciate you coming. Thanks, sir.